In this update, we'll be focusing on Bitcoin, as Bitcoin has been making a slight run and therefore altcoins have been breaking out left and right. Dogecoin has been showing the most strength, and we know that there is a ton of macro events taking place during this week, and today we've got PMI kicking in, but tomorrow it's more important as the FOMC meeting will take place. So we're going to deep dive into the FOMC meeting and what the expectations are from the actual event and which levels you should be watching when it comes to Bitcoin, but also what we're going to look at for the coming months. Before we continue, make sure to hit that like button and also make sure to check out our other social media channels and our giveaway for 1 month for free through Bybit. If you do that, you get 1 month of our premium membership. Last month we did 11% profits. This month it's going to be way higher. So make sure to hit that link and join our premium membership. Let's get towards the charts and the data which will come out during this week. So when we're looking at the important events for this week, tomorrow is definitely the biggest one, as we are looking at the FOMC statement on 7 p.m. in Europe, which will be the big one. But also earlier in the afternoon we got data coming in, which is the ADP non-farm employment change. Not going to have such a big impact, as the most important impact will be done through the FOMC statement, as we've got expectations kicking in, as we have been getting these actual hikes in the entire year already. In March we've had 25 bips, then we had 50 bips, 75 bips, 75, 75, and now again the projections are that we're going to get 75 bips, which will ultimately result into heavy volatility on the markets. And when we get 75 bips or maybe 100, or we could be getting a negative impact on the markets. If it's going to be 50 bips all of a sudden, then you can expect a skyrocket of the markets to the upside. So this is going to be a big one. The ultimate trick is to avoid excessive leverage and to avoid having tight stops during this event, because they will all be getting squeezed out of the markets before the actual move starts to happen. Now, when this data comes out, you probably are going to wait for the next one, which is the press conference from Jerome Powell. He will be speaking about the actual hikes, but more importantly, he will be talking about what the future perspectives will be for the actual event. So this is important for sure, but if it's going to be 4%, then it's what we are expecting to take place. Now, if he is going to speak about a more dovish pattern, and when he is speaking about potentially looking to pause the actual hiking because he sees data that is actually showing a weaker economy, or that the inflation is dropping down, which we have been seeing last week with GDP coming in as the price data has dropped from 8.7% to 4.1%. So that is important to watch tomorrow. And if he speaks about a, let's say lighter future, then the policy is getting towards the end, and then we're going to see a big impact on the yields. We're going to see an impact of risk on actually going up, and then we can start seeing an impact on the markets overall. So maybe even the press conference is more important than that we're watching the federal funds rate release at 7 p.m. So this is something you should keep an eye on. And that's what I'll be streaming live tomorrow, definitely. So be there tomorrow to cover, because I'll be covering everything. Then on Thursday, we got another big day coming up with ISM services PMI kicking in. We also have the Bank of England stating their monetary policy, so that is important to watch as well. And on Friday, we have got unemployment rate. Last time we had a more positive number, as we dropped from 3.7 to 3.5, which was unexpected. Right now we are forecasting 3.6. So this is also going to be a mover of the market. So it's a big week with a lot of macroeconomic events taking place. Now, when we're looking at macroeconomic events, and when I say it's important to keep an eye on what the Fed will be speaking, this is the chart that you should be watching. This is the 10-year yields, and the yields are reflecting the policy of the Fed, so they have to be in line with what the Fed is doing. Right now we can see that the 10 years, but also the 30 years, are falling quite substantially already. So the 30 years dropped from 4.4 to 4.08. The 10 years have been dropping from 4.3 to 3.95, resulting into a bearish divergence here on the weekly time frame. So technically speaking, we are likely going to get a correction here. Now, if there will be a hike tomorrow, probably the yields are going to bounce to the upside. But if the Fed Reserve Chairman Jerome Powell will be saying that he will be pausing the system, then the reflection will be that this one is going to fall. The same goes for PMI numbers. If PMI numbers drop below 50, this one is going to fall because investors are expecting the markets to actually slow down the policy from the Fed, resulting into risk on going well and then resulting into the yields dropping because they are just simply not expecting the Fed to keep up the policy. That is what we are going to see here. And if the yields are going to fall, we are also going to see an implication into the DXY, which is currently bouncing but making lower highs and therefore making lower lows as well. And once we can see that the yields are starting to fall because of a dovish Powell or the implications that we're going to adjust the policy, we are most likely going to see strength on the Nasdaq too. The Nasdaq is the inverse of the yields, and the yields have been showing this downward trend. If the hikes are going to be paused, it's most likely going to continue the momentum to the upside, or at least start breaking out quite heavily. And there's a big difference between the Nasdaq and the Dow Jones at this point. The Nasdaq has been falling quite swiftly, and the Nasdaq has been dropping quite substantially as we're still down 32%. If we're looking at the Dow Jones, we are up a lot already, as we are up 15% since the low, and since the peak high we are only down 11%. You're questioning yourself, what is the big difference between the two? Well, it's tech. If we're looking at tech, Apple for instance, it is doing fine. If we're looking at Amazon, it has been dropping quite massively. Earlier as well, we have been dropping quite substantially. We were falling even lower. Now we're just consolidating. Google has also been correcting quite substantially. And then even smaller ones, Netflix has been dropping from a stone. PayPal has been dropping quite massively. So Nasdaq is reflecting the weakness of tech, and tech is influenced by the Fed policy the most, just like crypto is. Both are growth stocks, so they are dependent on how much the rates are going to be, because the higher the rates, the more the risks on assets are going to be deleted, which is tech ultimately. So if the actual policy from the Fed is going to be paused, it is going to have an impact on tech, and it's going to result into momentum on risk on assets. You will be seeing Nasdaq going up. You will be seeing Bitcoin going up as well. And Bitcoin is currently showing some consolidation here after a nice breakout above 19.6. It wouldn't be stupid to have bids placed at the range lows. So it wouldn't be stupid to start bidding around 20k, but also around 19.6, because when the Fed event takes place, usually we take out the high, we take out the low, and then the actual event takes place. So therefore I stated to avoid taking excessive risk with high leverage. I stated to avoid going completely mental with tight stops. Just take it slow, trade in spot, be different than the mass, and expect the markets to fall lower or higher before the actual event takes place. So that's what I'm assuming here. I think that especially with the markets being in a sideways market for such a long time, we are definitely going to break to the upside once Powell starts speaking about pausing the actual events, or at least becomes a bit more dovish. I hope you have been enjoying this small update on Bitcoin and the markets. Tomorrow I'll be doing another short update, and later at 6:45 p.m. as the hour has been changing in the Netherlands in the past weekend, 6:45 p.m. Central European time, I'll be going live and I'll be covering everything surrounding the FOMC meeting and the Fed speech from Jerome Powell, and also my analysis with the expectations and how you should position yourself in the markets. Make sure to subscribe so then you know that we're going live, and make sure to be there tomorrow if you want to know everything about the Fed and the FOMC. Have a wonderful evening, and I'll see you again tomorrow.